Welcome back to the Daily Crypto Roundup. Today, we are going to take this market step by step because this is exactly the kind of day where the headlines can mess with people's heads. Earlier this week, Bitcoin had a strong boost, Ethereum bounced, XRP started waking up again, Solana moved higher, and for a moment the market looked like it was ready to turn a corner. But now, as we sit here today, that excitement has cooled. Bitcoin is back around $62,600 after pushing above $66,000. Ethereum is around $1,686 after getting close to $1,800. XRP is back near $1.14 after pushing above $1.20. Solana is around $68 after trading above $74. So before we get carried away with anyone shouting bull market or crash, we need to understand what actually happened, why the move faded, and what the real stories are behind the price action. That is what we are going to do today. First, we are going to look at the prices and where we are now compared with the boost earlier this week. Then we are going to move into the Federal Reserve, because that is the main reason the market has cooled off. After that, we will look at ETF outflows, because Bitcoin and Ethereum funds just lost $111 million combined. Then we will move into Algorand's post-quantum roadmap, which is not the loudest story today, but it is one of the most important long-term stories. And finally, we are going to finish with XRP, the ETF setup, the Clarity Act, and why that $4 billion to $8 billion inflow projection could be huge, but only if real institutional money actually arrives. And this is why you listen here. Because while people on X are talking rubbish, chasing candles, pretending every dip is the end of crypto and every bounce is the start of a supercycle, we are looking at the real stories. Not noise, not engagement bait, not recycled chart posts. The real stories are liquidity, ETF flows, regulation, institutional demand, and long-term network security. Before we get into the market properly, this episode is brought to you by Kraken. If you want a serious place to buy, sell, and build your crypto portfolio, check out the Kraken link in the description. We are also giving away 20 XRP to listeners who sign up through the link, so use that if you are getting started or adding to your crypto setup. As always, only invest what you can afford to lose and make your own decisions. Right, let's start with where the market is now. Bitcoin is around $62,600. Ethereum is around $1,686. XRP is around $1.14. Solana is around $68. BNB is around $576. Dogecoin is just over 8 cents. Cardano is around 16 cents. Tron is holding up better than most at around 31 cents. Avalanche is around $6.29, and Chainlink is around $7.82. So the first thing to understand is this. The market has not completely broken down, but the boost from earlier in the week has definitely faded. Bitcoin being above $62,000 is not disaster territory, but dropping from above $66,000 back into the low $62,000 area shows that the rally did not have enough strength to keep pushing. Ethereum is the same story. XRP had a nice move, but it has pulled back. Solana bounced, but then gave a chunk of it back. So now that we know where we are, the next question is obvious. Why did the market fade after looking stronger earlier in the week? That takes us straight to the Federal Reserve. The Fed held interest rates unchanged, which the market expected. The problem was not the decision itself. The problem was the tone. The Fed sounded more hawkish than investors wanted. Instead of giving the market confidence that rate cuts are coming soon, the message was basically, inflation is still a problem, we are not rushing, and rates may need to stay higher for longer. That matters massively for crypto. Bitcoin, Ethereum, XRP, Solana, and the rest of the market all trade better when liquidity expectations are improving. When investors think rate cuts are coming, risk assets usually get a boost. Money becomes cheaper, investors become more aggressive, and crypto often benefits. But when the Fed sounds cautious, or when rate cut hopes fade, money becomes more defensive. Traders take risk off the table. That is what we are seeing now. And this is where the market gets interesting, because President Trump signing the interim Iran deal actually helped calm some geopolitical risk and lifted stocks. Normally, if geopolitical fear drops and stocks move higher, you might expect Bitcoin to follow. But crypto did not fully join the party. That tells us the Fed is more important than the Iran story right now. So the first big takeaway today is this. Crypto is not falling because every story is bearish. It is falling because the market had priced in more hope on rate cuts, and the Fed has just taken some of that hope away. Now that we understand the macro reason, let's move to the next piece of the puzzle. ETF flows. Bitcoin and Ethereum ETFs lost $111 million combined. Bitcoin ETFs saw around $82 million leave, and Ethereum ETFs lost around $29 million. That is not a catastrophic number in isolation, but it matters because ETF flows have become one of the clearest signs of institutional demand. When ETF inflows are strong, it tells us that professional money is buying the dip. That can support the market even when retail sentiment is weak. But when ETF flows turn negative, especially after a hawkish Fed meeting, it tells us institutions are getting more cautious too. So now we have two pieces of the story connected. First, the Fed cooled rate cut hopes. Then ETF flows turned negative. Put those together and you understand why Bitcoin could not hold the move above $66,000. This is why the market can look bullish one day and heavy the next. It is not random. It is not just manipulation. It is not just whales playing games. The market is constantly repricing around liquidity, rates, and institutional flows. So where does that leave Bitcoin now? Honestly, Bitcoin looks trapped in a range. The market does not look dead, but it does not look free either. The broad range still feels like $60,000 to $70,000 until something big breaks it. That catalyst could be a softer Fed. It could be fresh ETF inflows. It could be stronger regulation. It could be another major institutional buyer stepping in. But until we get one of those, the most realistic view is that Bitcoin may chop around, punish over-leveraged traders, and keep frustrating everyone who wants a straight line higher. Now we are going to move away from the short-term price action for a moment, because the next story is less about today's candle and more about the future of blockchain security. Algorand has unveiled a post-quantum roadmap designed to secure the blockchain by 2027. This is one of those stories that will not get the same attention as a Bitcoin price move or an XRP ETF headline, but long-term, it matters. The concern is that future quantum computers could eventually become powerful enough to threaten some of the cryptography that protects blockchains, wallets, signatures, and transactions. Now, that does not mean quantum computers are going to break Bitcoin tomorrow. That is not what this story is saying. But it does mean serious networks are starting to prepare early. Algorand is looking at upgrades that would make the network more resistant to quantum threats by the end of 2027. That could include new account structures, stronger cryptographic signatures, wallet upgrades, and infrastructure changes that make the chain more secure for the long term. The reason this matters is simple. Crypto is maturing. The next phase is not just going to be about which coin can pump the fastest. It is going to be about which networks can survive regulation, institutional adoption, cyber threats, quantum risks, and real-world usage. So the third takeaway today is this. While the market is obsessing over short-term price moves, the serious builders are preparing for problems that could define the next decade. And that leads us into the final major story today. XRP. This is probably the headline that a lot of listeners have been waiting for because the XRP setup is big. But again, we need to treat it properly. Not like Twitter. Not like the account screaming that XRP is going to the moon tomorrow. We need to look at the actual mechanics. The big claim is that XRP ETFs could attract between $4 billion and $8 billion in first-year inflows if the Clarity Act passes. That would be a massive institutional catalyst. But here's the important part. XRP does not just need hype. XRP needs a change in buyer base. At the moment, XRP has had positive ETF-related attention, but a lot of the flow has still been retail-sized. That can help support price, but it may not be enough to smash through major resistance. One of the key levels is around $1.45, where a large amount of XRP supply is believed to be sitting near break-even. In plain English, a lot of people bought around that area, watched the price fall, and may be waiting to sell when they finally get back to even. That is why XRP can get good news and still struggle around certain levels. The story can be bullish, but if a wall of holders is waiting to sell, price still has work to do. This is where the Clarity Act becomes important. If it gives XRP stronger legal certainty, then larger institutions may finally have the confidence to allocate serious money. That is when the $4 billion to $8 billion ETF inflow projection becomes meaningful. But we have to be careful here. A projection is not the same as confirmed money. The real signal will not just be whether Clarity passes. The real signal will be whether XRP ETF inflows accelerate after that legal clarity arrives. So the XRP takeaway is this. The setup is strong, the potential is real, but confirmation still matters. XRP needs real institutional flows, not just retail excitement and social media hype. So let's bring all of this together. We looked at why the market faded. The answer is the Fed. Rate cut hopes cooled, liquidity expectations weakened, and crypto sold off even though the Iran deal helped lift stocks. Then we looked at ETF flows. Bitcoin and Ethereum ETFs lost $111 million combined, showing that institutional demand cooled at the exact moment the market needed support. Then we looked at Algorand, which is preparing for quantum security by 2027. That story is not about today's price. It is about whether blockchains can survive the next generation of technological threats. And finally, we looked at XRP. The ETF and Clarity Act setup could be huge, but the market needs real institutional inflows to break through major resistance and prove the thesis. So the honest read today is this. Crypto is not dead, but the easy bounce has faded. The market is still waiting for liquidity, legal clarity, and stronger institutional demand. When those three things line up, the market can move fast. But when one or two are missing, we get exactly what we are seeing now. Sharp rallies, sharp pullbacks, and a market that punishes anyone who only reads headlines. And that is why we stay focused on the real stories. Not Twitter noise, not panic posts, not moon boy nonsense. The real stories are the Fed, ETF flows, regulation, security, and institutional demand. Drop your thoughts in the comments. Are you buying this dip, waiting for the Fed to soften, or watching XRP and the Clarity Act as the real catalyst? Like and follow, and we will see you at the top.